underemployment. People who have got jobs are often underemployed. They're in part-time works rather than full-time work. So there's a lot of pressure still on the labour market. It still hasn't recovered to that pre-crisis situation. Not only that, there's been a lot of fiscal austerity in the US this year, so incomes are being squeezed too. And the rate of growth in the US right now, well, there is growth, but it's much more disappointing than what people were anticipating for this point of the economic cycle. So can they act? Well, the problem is if they don't, then many people are saying there's credibility on the line. Back in May the 22nd, Bernanke, the chairman of the Fed, told us that tapering, as they're calling it, could happen in the next few meetings. Here we are, next few meetings later. Are they going to taper? Well, if they don't, people are going to say, well, they signal they would. So if they don't do it, that goes against their credibility. So people are anticipating that they will, but probably only going to dip their toe in, only reduce the amount of asset purchases by a fairly moderate amount.
And what impact will that have?
Well, we've had a huge amount of impact in the summer. Just the idea of tapering has caused a huge ruckus, particularly in emerging markets. Now, emerging markets are considered to be a risky asset. Equities are considered to be a risky asset, but emerging market equities much more so. And emerging markets over the summer have seen a huge amount of capital pulled back out of these economies. And that's quite dangerous for many of these emerging markets. So again, if the Fed give a big shock to the markets today, those emerging markets are vulnerable. But what I think might happen is that they will just dip their toe in, they'll just pull back a little bit of the amount of monthly asset purchases, and they lace that with lots of language that reassures us. And I think that's probably what they're going to do, but it is quite exciting.